everyone, Michelle and Emma here. Welcome back to our channel. Thank you for subscribing and thank you for the support. If you are new here, please make sure you hit the subscribe button and the bell so you don't miss any of our future videos. We are doing a series on the best lenders in the Valley. These people are going to take amazing care of you. And today we're going to be interviewing a longtime friend of ours, Ted Canto. He is with American Mortgage Network. Hi, Ted. How are you?
Hey, everyone. How you doing?
Good. It's good to see you again. Well, let's get right into this. Where are you from? Are you from Arizona? How long have you been here?
Oh, God. I guess the way that Arizona works, I'm officially an Arizonian now, but I'm actually originally from Boston. I've been here since 1996. So I don't know how old that makes me. But yeah.
Old.
That's my life.
Old.
Well, cool. So how long have you been in the lending business?
I've been in the lending business going now on 24 years.
Oh, wow. So just about as long as you've been in Arizona, huh?
Yes. Yeah.
Just about as long as Emma's been alive, Ted.
Yeah, that too. Way to make me feel old.
Makes me feel young, so that's okay. Well, tell us a little bit. I know you're a big family guy. You love your family. Tell us about them, your wife, your kids.
Going on 24 years this weekend coming up. So
congratulations.
Yeah, so been in the mortgage business in Arizona and married just as long. Actually longer in Arizona. But got 3 kids, 1 in college, 2 still in school, in grade school. And I got a very enthusiastic, energetic, and that sarcastic bulldog by the name of Oso. He's very lazy, so.
He's very cute. I always love the pictures you post of him. So that's
especially
good.
the videos of him snoring and stuff.
Yeah.
Oh, yeah.
We love those. So what kind of things do you do outside of work for fun? Because we all have to have lives too, right?
Yeah, absolutely. Well, I am a foodie, so I love really good food. I am very particular about where I eat and what I eat. And so that's part of our pastime, is finding really great restaurants. The other one is I'm very much into coaching other men in their relationships and in their business. And so I spend a lot of time doing that.
That's awesome. Yeah. And I already mentioned you work with American Mortgage Network. How long have you been there?
We have been open for officially now 4 years. I'm part owner of the company, and it's actually several owners. We all kind of joined together and opened up a company specifically to create something that was employee owned. And so yeah, we've been open for 4 years now.
That's awesome. What's your favorite part about being with that company that you're part owner of?
That everybody is an owner. So we actually created the company at a cocktail table, just kind of, shooting around ideas. And we came up with an idea like, what would it look like if we opened a company that was owned by all of its employees? And so everyone has a stake in the company. Everyone has an interest to grow the company in the right direction. So I think that is what makes us special.
That's awesome. And within the loans that you're doing, do you have a team, an assistant? What does that look like?
I do. I have an assistant, and I also have a junior loan officer. So junior loan officer typically helps out with getting certain paperwork, and if I'm in another appointment, he kind of fills in on with certain clients. And he just kind of goes through the interview process, and I make sure that everything is reviewed, and then we have a final consultation with me in it. And our loan officer, our loan transaction coordinator, she handles a lot of the paperwork, so a lot of the behind the scenes work that takes place.
I'd love one of those.
Yeah.
You are one of those. You're the.
I know. I want my own though.
It's kind of interesting listening to hear Emma say, we've been friends forever. It has been forever. We hang out with, my husband, your wife, we all have a good time. And so I'm excited to have you here today. So I just wanted to get that out there. I know that you do a ton of VA buyers. Is that correct? Like VA loans?
Yes, I'm a veteran myself. Our company is overwhelmingly owned by veterans. We have catered the company. I mean, we do all kinds of loans and all kinds of clients. However, we've fallen into the realm of helping a lot of veterans on a nationwide basis because we also own an educational platform that educates veterans on how to build generational wealth. So we help them, we guide them and help them and teach them on how to use their VA benefits, and also join together with other veterans in investment opportunities that help them build wealth. So it's just been kind of what we really never set out that way, but it just ended up that way. So we do a lot of veteran business. Yeah.
That's pretty powerful. I don't know. I mean, like our next section is, benefits to the buyers. I see that as a huge benefit to the buyer.
Yeah, absolutely. One of the things that we do, that I do, and it's kind of just the way that we do business, is that we take everything as an investment opportunity, even if it's their primary residence. We approach it with an investment point of view. A lot of people get excited just for the fact of owning a home versus renting, and we kind of dive in a little deeper with them and show them how their investment will help them in the future and how to basically take that and repeat it. So we try not to just make it a one and done. We teach them on how to look at it as a temporary solution to grow wealth, and then replicate it again, and then again and again, until by the time they know it, they own 3 to 4 houses.
So for the veterans out there that may not know this or may not be familiar with their benefit, maybe they've never used it, what does a VA loan look like? So it's no money down, correct?
There's no money down. If the veteran happens to be designated as disabled, there is no VA funding fee, which can sometimes go anywhere between $5,000 to sometimes $20,000 that's tacked on to the loan. That's a lot of money. So if they're disabled, that's waived. At the same token, there's a lot of flexibility with VA loans. So there is no loan limit. And what ends up happening is, one of the things that we teach them is that if you move into Arizona, for an example, you buy a home at $300,000, you can still have entitlement left over, in which in 2 years' time, you grow your family, you move to another neighborhood, you can reuse your VA again and rent out that other home, sell it, whatever have you, and use the VA to purchase another home at zero down. So the idea is that they can do that strategically, 3 to 4 times over.
Wow, I did not know that. That's good to know.
Yeah.
Do you think that's one of the things that sets you apart from other lenders? Because I don't know anybody else that's educating veterans to have generational wealth.
Yeah. I mean, we do, because at the same time, I'm part of the platform. So part of the platform goes beyond real estate. So we talk about investment opportunities in the stock market, life insurance, different strategies. So it's not always just one and done on the loan or real estate side. We continue the education process. And so a lot of times they come back to me, I want to refinance, I want to pull out money because I learned how to take some money and put it into the stock market and grow it. So we have a lot of those conversations going back and forth.
What systems do you follow, like for everything from communication to, checking in with people? What do those look like? What systems do you have?
Well, yeah, you're setting me up because you know that I'm a CRM geek. I love my CRM, and so basically I use it so that strategically, that if you will, in that I make sure to consistently stay in touch with the client. I bring up a lot of educational pieces. A lot of buyers don't know what is available to them or the information that's important to them. They just want to get into a home oftentimes. They just want to know that we could do a good job at accomplishing that. So with a lot of the content that I put into my CRM, I can constantly communicate with them and interact with them in key points of the year. And so that's via text messaging, email, voicemail, just staying on top of them. And so I use my CRM very strategically to remain in communication.
And for people out there, because remember, the consumer is going to be seeing this. A CRM is your client relationship management platform that you use.
Right, correct.
Yeah.
So it's just it's a high-tech Rolodex,
Yeah.
if you will.
Yeah.
What's a Rolodex?
Touche, touche.
Touche, I know, I was gonna say touche.
You're funny. I know that I get text messages from you, just little nuggets. And I love that because I'll be busy during the day and then I'm like, oh, I didn't know that. And so to me, that's really cool, the way that you communicate. And I know you do that with your buyers as well. Is there any other type of communication, or what kind of communication can a buyer expect from you?
Well, when they're in the process, they're going to be communicated throughout the process. One of the, as we all know, but the consumer doesn't, one of the biggest complaints amongst other consumers and even industry people is the lack of communication that can happen. It's a very stressful situation. It's not hard, but it is an emotional purchase. I mean, it's an important purchase. Someone's buying for them and their family. And what no one wants is being left in the dark when something so important is happening. So we do our best to stay in a high rate of communication with the client, letting them know where they are at every stage of the process. Now, how they're treated is bad. No, that's not. One of the things that they don't know, tax season comes up. Oftentimes they're left not knowing that they should be bringing in their settlement statement to their tax preparer because there's costs and so costs that can actually be written off at the end of the year. And so oftentimes we already have it programmed so that at the end of every year, they are reminded that we have this settlement statements, we can easily send it over to them, and we keep the communication going there as well. Like, oh, I didn't know that. And then that sparks a different conversation, or, like I was thinking about refinancing or buying another home. And so we're always in communication about something, their birthdays, all their anniversaries. We make sure to stay in touch with them.
So if we go into like tips for home buyers, what current loan programs are you really excited about?
Well, as of recent, conventional loans, which a lot of people are familiar with, have gotten a little bit more expensive. Fannie Mae and Freddie Mac decided that they were going to change the cost of those loans. So what I'm seeing a lot moving forward right now are first-time home buyers. First-time home buyers tend to fall into the FHA category. FHA is the Federal Housing Authority. They've created a program long time ago that is a lot more flexible for a lot of the home buyers, credit-wise, down payment. If you don't have down payment, there are other programs that will help you with that, or even allow you to get a gift from a family member. So we're seeing a lot of FHA. It's so flexible that it's also, in the inside of our industry, it's also important that you speak with a lender that knows the program well, because there are so many flexibilities that ensures that the loan officer needs to know what he's talking about and what he's doing, and then able to help that client. There's just, flexibility brings rules. And so the loan officer should be very knowledgeable about those guidelines and those rules. And so I love it because it's kind of where I started in the industry. That was my first loan. And I remember my mentor saying that most people are going to fall under the FHA category, and you should really know what you're doing here, because most people are going to need that program. So
I always tell people this is a realtor, so I always refer them to you guys because I know just enough to be dangerous. But when somebody is talking to Emma and I, and they haven't gotten their pre-approval yet, we kind of take them through the basics of loan programs. So, there's the no money down, there's VA, USDA. Are they doing anything now?
They are, but they've pushed the boundaries. So USDA, for those watching, it's usually it's a zero down loan program for rural areas. Are we specifically talking about Arizona? the program itself has pushed out the boundaries as to what is considered rural. And so what used to be considered rural is no longer rural. So it depends on where you're looking to buy, but it's still available.
Okay. So we, again, VA, the USDA, and then it goes into 3% conventional, but it sounds like some of the conventional guidelines may not be great right now. And then 3.5% down for FHA. And then you go into the 5% conventional, 10%, 20%, and so on. In order on a conventional, is this still the same? In order to avoid mortgage insurance, they have to have at least 20% equity or 20% down?
That's correct. Yeah,
okay.
That's 20% down. Yeah.
And then FHA, what is the maximum amount somebody can borrow in FHA right now? I know it changes, but in 2020.
Yeah, 2023 it went up to 400, and you're gonna catch me off guard now, aren't you? But I want to say it's about $433,000 for FHA.
Emma, you can Google it, so let's catch him off guard.
Yeah,
because I always have to Google it.
Something new that came up with the FHA loans, and I wanted to, maybe if you had anything to talk about with this, is the mortgage insurance premium going down. I think that's going to be happening actually this month. What are the lenders talking about with this? This sounds like something super exciting to, help FHA buyers save money yearly, and, talk about that.
Yep. So to correct myself real quick, it's $472,000 for Maricopa County. And on the MIP, the mortgage insurance premium per month was 0.85. So that meant that you were paying mortgage insurance at a rate of 0.85 of the loan amount divided by 12. That's what that number would be. They recently changed the guideline and reduced it to 0.55, which is significant when you do the math. You can save yourself easily a couple of $100s a month off of the payment when utilizing that program. And also the VA did the same thing. The VA funding fee that I mentioned earlier, they just came out this about last week and reduced that funding fee from it could be 2.4 to 2.15, and then they also reduced it from 3.6 to 3.3, which that's another conversation, but they did reduce it substantially as well.
Yeah, that's awesome. Emma, I did not know about that, so thank you for bringing that up.
Yeah, I mean, there are tons and tons of loan programs, and just depending on each person's individual finances, if they're going to be qualifying with another person, if they're going to be having gift money. It sounds like you guys have a ton of different loan programs that you can find one that works great for someone's individual plan and life and circumstances, which is really great. You have the no down VA, we have the 3.5% FHA, and with the lower mortgage insurance, it sounds like there's a ton of great options out there right now, and something for everybody, really.
Yeah, and one thing I would like to add is that, for those who are viewing, it's never, I think one of the questions was, what should people look for as a lender? You should always look for a lender that it doesn't necessarily tell you, no, you can't buy a house. It's just a matter of when, because it really is. It's setting yourself up correctly. Saving money could be one of those tips. One of those tips could be paying off some debt, get your credit score back up, or bring your debt down. There's a lot of ways to cut it and slice it to get someone into a home. They just have to have the willingness to do the work. But a good loan officer should be able to draft a map for them and help them with that process.
Yeah, definitely. I mean, it sounds like with everything you're doing with the, you do a lot of coaching, first of all, which is great, but coaching the veterans and how to build generational wealth, you're an awesome resource for even in someone that's not a veteran to get them on the right track. And, if they want to buy a house in a year, 2 years, 3 years, to start on that process and really make a roadmap for themselves with educated help. Because when you're just starting out on your own and there's a million things going on, you don't necessarily know which things are right. So I think you're a really great point person for that, for people that are kind of just starting the process and maybe looking to buy a home in a few years, or just seeing what they can do right now and going to you because you're huge on education and coaching people and giving them different options to succeed in their life, which is just great because it really does make a huge difference in people's lives and families.
Yeah, absolutely.
There's there's the loan officers that are one and done. And then there's the loan officers that people have throughout their life that become part of their financial planning. It
Right.
becomes part of like, hey, you could do this or you could do that. And I think that's really, really valuable. If you had, I don't know, 4 or 5 solid tips that you would want to share, and what would those be? Like, and it can be anything. It can be like rule number 1, they need to talk to the lender right away before they talk to a realtor.
Yeah. One of them is do your best to keep your credit card balances at 30% or less, but never zero. The logic would tell you like, let me just pay a credit card off, right? However, that can actually be detrimental. For some situations, it can be detrimental to your credit score. So always keep the balances below 30, but never zero. That would be tip 1. Don't always immediately go and do the right thing by paying off your collection account if you have any collections. That sometimes can actually damage your score even further. So speak to a loan officer before paying any collection accounts off. Medical collections, oftentimes we don't require them anyways. So it just depends on the individual situation. I would say speak to a lender.
What do you mean you don't require them?
Lenders, when it's a medical collection in specific, lenders do not require that the consumer pay them off.
Oh, gotcha.
So,
okay.
So what you're saying is they kind of look at medical debt a little bit differently than other debt.
Yes, correct.
Not necessarily something you really chose to get into, like
Right.
a car payment or something like that's a little different kind of debt.
Yes, it is. And at the same time, paying it off can actually be detrimental to the score, because what happens is that account may have gone dormant within the credit scoring algorithm. And by paying it, it awakens that giant. And now it's like, oh, there you go. And then all of a sudden your score drops. So, and then logic will tell you, do the right thing, pay the account off, but it doesn't always work that way. So the other thing, the third one would be is, yes, speak to a lender. It's okay to speak to a realtor. However, you're kind of driving in the dark, right? You're putting the cart before the horse, not knowing how much you can actually qualify for, and actually strategize. Because sure, you may not qualify for this sales price. However, speaking to a knowledgeable lender, he may tell you or ask you the question, are you able to pay this card off? Because by doing so allows you to qualify for another $20,000, $30,000, $40,000. That can make a really big difference in your shopping experience. So strategizing is very important. So speak to a lender. Now I'm on number 4. Now I'm getting really nervous.
Number 5.
Yeah. Number 4, never assume the worst, because I can't tell you how many times, this goes back to speaking to another lender again, but I can't tell you how many times people have put off buying or looking at the opportunity of buying a home because they think that their situation is dire, or they're not even looking really. They're just kind of, like, I don't want to look at it. I don't want to deal with it. And once they speak with me, they realize like, oh, wow, it really is possible. So don't always assume the worst. Allow yourself the opportunity to speak with the lender, even a realtor in a lot of cases too, because the possibilities, there's always a possibility. There's always an opportunity. It's just knowing how to get there.
That part reminds me of like just, from point A to point B, like always just look at your point B. There's no judgment on it. It's like, this is just where you're at. If we have stuff to clean up, we'll handle it. And, we'll give you some guidance and you can get it cleaned up. There's no judgment around that. So that's how I explain it to people. Like, let's just look at your point A and see where you're at. And then we can get you where you're going to go. Yeah,
life happens. It's happened to me. I'm in the lending business for bazillion years now, and it happened to me. The crash came and I it affected me in a bad way. So life happens and we get it, and there is no judgment whatsoever. And number 5, drum roll. Okay. What would I say is probably the best one? Buy a home that you're really happy about, that you really, really want, that's really going to bring quality time to your family, to your lifestyle. A lot of people oftentimes will And I get it. Sometimes it's a requirement. They buy homes that are more affordable, quote unquote, to only a year later, 2 years later, be like, you know what, I really don't like this house. I want to move. And if you do the math over time, buying and then selling in such a short period may actually really cost you, because the time that the equity grows in the market, how much money it's going to cost you to resell that property. Sometimes it's just worth going up another $10, $20, $30,000 to be able to live in the home that you really, really are going to like and that your family's going to grow into. So that would be my fifth tip.
That's a great advice. We have a couple more questions, but this one I always say it's the last question. Of course, we want people to know how to contact you and all that. So we have that as our real final question. But and this is just like in a one sentence answer. What is your favorite thing about your job? Helping people get into a home. Yeah. Yeah, there's nothing more rewarding than that, I think, when somebody just realizes like we did it, especially people who you really didn't think, like you were talking about, really didn't think could get into a home. And then, so let's say we have a home buyer and they're watching this right now. How do we get them in touch with you? What's your phone number? Do you want them to email you? What's the best way to contact you?
Whatever way is best for them. But however, my phone number is 480-650-8602. And my email is pretty simple. It's ted@tedcanto.com. And they can reach me through there. Text, call me, email me, whatever works for the home buyer.
Thank you so much for taking this time with us. I think this information will be really helpful for some buyers out there, and I really hope they reach out to you, because I know you are really a genuine person that wants to help people, and you do a really good job. So definitely reach out to Ted. He shared his contact information. I know he'll be waiting at the phone for you, checking his email. And thank you guys so much for watching. I hope you enjoyed this video and you got a lot of great information from it, and we will see you next time. Thanks.
Thank you.
Bye.